Hello, today is Tuesday, the 14th day of February 2013, and yesterday Drutter did a video regarding the Canadian penny. For the last few years, I've been trading in the fiat debt notes to get several of these 16-pound buckets, each of these containing pennies from Canada and the United States. Interesting penny here, which was given to me from eBay many years ago. I didn't even expect it. It was given as a bonus. I bought some silver coins, some scrap silver. Nice little penny here, the only one of that size that I have. This is a US penny. Apparently in Canada, the ones that they do like are the King George ones. This is a little small example. Here's another one here. I like them in mint condition if I possibly can. Sort of like this 1963. Or two of them actually, because there's the front, there's the back. And then they stopped making these pennies in Canada with copper in 1996. For 3 years in 97, 98, and 99, they put them in zinc. For the United States, copper went to 1982, depending on the year, and then after that, they've all been made out of zinc. Since then in Canada, they've been made, of course, out of steel. That's a debasement of the money, yet they'll talk about having to get rid of them because, well, it costs so much, where it should be telling you the reason why it costs so much is because of the major devaluation of the currency. And in 2010, I had an interesting decision to make on buying this coin or not, as this coin was selling for 25. At the same time, other designer coins were selling for around 22, and Maples and Eagles were selling for 24. The Blue Jays at this time, and really still today, have sucked for quite a while, but they were really good back in the day. This is a 93 World Series coin. They had a nice little mini dynasty for about 8 years. And there used to be a day and age where people knew what money was, and then for a long time they didn't. And just maybe again, they will again. It's maybe sort of like the same old story here, because, well, we're kind of forced to know what it is, or we got a lot of problems ahead. Okay, now on to the charts. Silver down about 2/3% today, and palladium up about 1/3%, and a big difference when you look at the week, as gold and silver, of course, have been taking the hit lower. Palladium and platinum has not been the case. So let's take a look at these charts. The daily chart for silver at 200 plus years of the United States historical debt outstanding chart. So let's start off with the daily chart within silver. And there was this downtrend that occurred. So now in order for this to reverse trends, you need to make this flat or have a big boost higher to make it go higher, which, of course, there we can see here, the boost higher, making it go higher, come back and find support, which was successful, and then break the resistance to establish a bull market. Well, it didn't break the resistance. Instead, it made a lower high from the previous one, now a lower low. It has not been able to have a break above this running average from this high and then stay and break above it. It got above it here, so it established this resistance, and it was unable to take that one out as well. So the last test of about the high 30s, low 31s, which was tested for the previous 3 days as support, has pretty much been that of a resistance test today, making the next support area in the area of the low 30s and the high 29s. That's pretty much the look of it right there. So nothing too bullish right now about this trend. It's not looking as likely that this is going to cause that failed breakdown that's going to start gains going into the end of February. But again, you never know about that. But I'd be looking for tests of the low 30s to occur probably later this week, even tomorrow as well. That's the silver daily chart. Now let's go to the historical U.S. debt chart, because this is an interesting chart. We're getting very close to that point. They were talking about this time of year to end of February where the debt ceiling issue is going to come into play. Well, this is the chart of the U.S. historical debt outstanding. There's the link to the data above here. The data is also available on my directory link below, which has the information from the late 1700s to today. Let's first look at what happened here. If you want to know why the debt got completely destroyed, and it actually went to nothing, technically, for a short period, then you might want to search Andrew Jackson, as he wanted to remove the United States Central Bank, the fiat bank at that time as well, pay off the national debt, but the bankers really didn't enjoy that too much, and the debt obviously continued to go higher. But let's even look at the historical parts within this. Having the debt go sideways, it had a little spurge here, and well, it was, I guess, stabilized, and even in here, you can see this long stabilization period from the mid to late 1800s all the way to the early 1900s. Then in 1913, about 100 years ago, it was the Federal Reserve that came into play. It has been nothing but going straight higher. It has obviously broken this 100 deviation pattern multiple times, as we, of course, are closing in on 16, 17 trillion. The next resistance target, I guess, if there is such thing as resistance, is 100 trillion. And I'm just basically saying that because as long as people keep their faith in a system guaranteed to cause this debt, which for culture is only going to be destructive, then we're going to have a destructive society. Plain and simple about that. This trend line is extremely clear. Major uptrend, to say the least. People need to find out about this kind of stuff because there is still time for the people to make the changes. If they're expecting the changes to come within, then I don't know what else to say. Thank you for tuning in and have yourself a magnificent day. Bye-bye.